How will the restriction of relief on buy-to-let mortgage interest affect landlords?
Starting from April this year, there will be an increasing restriction on the level of interest that can be deducted from a personal tax return. By 2020/21, there will be a 100% restriction on the deduction of interest, and that will be replaced by a flat rate deduction at 20% of your actual interest, or rather I should say finance costs, because it includes any fees charged by the lender as well as just the interest. Starting in April this year, there will be a 25% restriction, rising to 50% the following year, 75% the year after, then 100%, as I said, in 2020/21.
So what will be the impact of this restriction?
The impact will be on the higher and additional rate taxpayers of 40 and 45%, who will be taxed on their rental income or rental income after allowable expenses at 40 or 45%, but will only get a tax deduction for their finance costs at the rate of 20%. And this could indeed mean that in extremis they would pay more tax than they are actually making in profit. Now, it's actually worse than that, because there is a category of people who might believe that they're not going to be affected by this tax change, but will be affected. And let me explain that a little bit more. If an investor is close to the barrier at which they will increase from a basic rate taxpayer to a higher rate taxpayer, they might believe that, for instance, that they've got £40,000 of other income, and they therefore, after allowances, they've got maybe £10,000 of margin before they will move into the higher rate tax. But it is the turnover, in other words, the rental income after the costs, that will determine whether you move into the higher rate tax, not your profit. So somebody with, say, £20,000 worth of rental income and £12,000 of finance costs might believe that they're not affected by this, but they will be, because it is the addition of the £20,000 to their £40,000 of other income that pushes them into the higher rate tax band. So they will be affected by this and need to consider what they can do to mitigate their position, probably by getting advice from an accountant.
So should I be borrowing via a limited company going forwards if I'm a landlord?
For many landlords, that's now quite a sensible option because of the stress tests that started to be introduced from the 1st of January, are more generous for limited company borrowers than those borrowing in their personal names.
Does it take longer to process a limited company application?
In theory, yes. Reasons behind that is that lenders generally will have to undertake a search on the company, and then also the directors and potential shareholders behind that. So there's obviously a bit more to do than a standard personal application. So they will check out the right coding of the company and then the individuals behind that. So yes, in theory, but not a massive amount of difference, maybe 24 hours.
And that's if it's an SPV, but it's slightly longer if it's a trading limited company?
Yeah, you generally find that they'd want to see some accounts to back up the history of that sort of trading company, just purely because of the trading element of the company itself.
Okay. Are buy-to-let mortgages more expensive for limited companies than they are for personal borrowers?
On the face of it, yes, purely because that some of the likes of the mainstream lenders that lend to a personal capacity, such as the Birmingham Midshires, the Mortgage Works, those type of lenders don't actually offer anything in a limited company capacity at the moment.
Right, and what about the ones that do offer to limited companies?
The ones that do would seem to be a little bit more expensive. However, we are generally seeing a lot more lenders starting to sort of offer either the same or certainly reducing their margins from the ones that will offer personal and limited company products, such as our own brand, such as Keystone, for example.
Yes, that offers the same rates, doesn't it?
Correct.
To limited companies and to
yeah,
personal
and
borrowers.
we're seeing other lenders as well, sort of looking to reduce their rates or certainly try and bring down those margins between personal and limited companies. So, in theory, yes, they are, but certainly not as wide a gap as they used to be.
Okay. Why can landlords borrow more via a limited company than personally these days?
The PRA announced some changes with the way that lenders have to stress rental income on the back of the tax changes that are coming in over the next couple of years. Essentially, landlords are going to be paying more tax, therefore lenders need to be more mindful of the lower income the landlords will have from the rental properties. The way that limited companies are taxed is different, and therefore these changes won't be impacting that, and lenders are able to offer a more relaxed calculation when lending to limited companies.
Right, yes, so I've heard that there's a kind of standard rent to interest calculation now for personal borrowers of around about 145% at a stress test of 5.5,
Yes.
whereas limited companies, actually they're still being given the traditional stress test rent to interest calculation of 125% of rental income times by a stress rate of 5.5 or less if it's a 5-year, less than a 5-year rate. Is that right?
It is, yeah. I mean, what you'll find is that in the personal borrowing space and also the limited company, there are some variations on those tests. So, for example, if someone's taking a 5-year fixed rate, some lenders are opting to offer slightly more lenient calculations than on shorter term 2-3 year products. And likewise, there's the ability to sometimes take into account personal income and personal tax situations. So some lenders are taking a more bespoke approach to borrowing. But yeah, as a rule, you're absolutely right with what you've just said.
So that's a reason to come to a broker who knows the market and can work out which lender provides the most appropriate stress test for your situation.
Yeah, absolutely. So the market just became a lot more complicated in the last few months, basically. So yeah, specialist advice is always a really good idea.
What's the difference between an SPV and a trading limited company?
The trading company will have their day-to-day business through that company, and an SPV will just have property. So it will be set up purely just to hold the investment properties, whereas the trading company will have income from creditors, debtors, all coming through that one business, and also hold the property.
So does it matter if I go to a lender and if I've got an SPV or a trading limited company, will they treat them both the same?
No, they'll treat them differently. So some lenders will do SPVs just purely, others will do trading companies. So it's down to us to decide where to go. But they will base it on an SPV, they'll base the underwriting on your personal circumstances. So your income being over 25,000 will get you over the line. Whereas a trading company, they'll look at 2 years accounts or 2 or 3 years accounts for that company.
Right, so SPVs, I would take it then, are more popular with the lenders.
Yes, yeah, because they're a little bit cleaner and a little bit simpler. So a trading company, there's a bit more complexity to it. But either way, the rates don't vary drastically. It's just some lenders will do trading companies, some lenders will do SPVs, some will do both. So it's just working out which is more favourable for that person.
How would I go about setting up an SPV?
That's quite easy. You just need to go onto the Companies House website, which obviously you can find through Google, and then key the information on that's requested and follow the step-by-step instructions. It is easy. Somebody in the office went through a similar process for their own personal benefit, and the most difficult question was, what shall I call the company? So thinking up a name.
Brilliant. So actually it doesn't take very long.
No, not long at all. Just pay your £15. There are some other websites out there that will offer to do it for you, but they will charge more than that, and there isn't really a need.
What is a SIC code?
A SIC code is a standard industrial classification code that defines what a limited company will do. So you may have a butcher's with a different number to a property company, for example.
And the lenders are looking for property SIC codes on companies?
Yes, ideally they prefer the company to purely deal in property rather than trade in something else as well.
But there are lenders out there that will look at either an SPV that's got a SIC code or a trading limited company, whatever that may be trading in.
Yes, we have a smaller number of lenders that will look at both trading and property companies as opposed to purely SPV companies.
Can I borrow through a newly created SPV because it's got no accounts?
Absolutely. So what happens is when you borrow through a limited company, the lenders will ask that the directors and or shareholders, depending on the lender, offer an unsupported personal guarantee. So what that means is that while the limited company forms a wrapper around the deal, actually the buck stops with the people that have offered those personal guarantees. So really when lenders are underwriting limited company transactions, their focus is very much on the individuals behind the company rather than the company itself, and because of that they can lend to newly set up companies with no trading history whatsoever.
Can you explain exactly what is a personal guarantee?
Essentially what happens with the personal guarantee is the lender is saying, if we lend you this money and you don't pay us on time, we have to repossess and sell the property, and the proceeds of that sale don't raise enough to clear the money that's outstanding to the lender, the person who's offering the personal guarantee becomes personally liable for the shortfall. It doesn't mean they're taking a charge on the person's own home or other assets. It just means that fundamentally an individual is personally responsible for ensuring that the bank will get their money back.
Can I simply transfer my personally owned rental property into a limited company?
No, you should sell your personally owned property into a limited company, and unfortunately that's then a taxable event, so you could end up with capital gains tax in your personal name, as well as paying the stamp duty and of course the 3% surcharge stamp duty on the limited company as well.
As well as the standard costs of selling a property?
Yes.
And can I sell the property for any amount, like a nominal amount for £1 or something?
It must be done as a market value.
Oh right, the taxman is looking for an open market value sale?
Yes, they want to get their stamp duty on the full price.
Of course they do. Are there any downsides to operating via a limited company?
Well, first of all, there's actually an additional upside. Starting in April this year, the rate of corporation tax is due to fall from 20% to 19%, and by 2020/21 it's due to fall to 17%. So that's even lower than the basic rate of tax. So anybody who wants to keep the money in the company, no matter whether they're a basic rate taxpayer or a high rate taxpayer, will be better off with the properties in a limited company. However, there is always a but to these things, particularly with tax. If you're a higher rate taxpayer, you're presumably at some stage going to want to get the money out of the company. And there are various ways that can be done, either by salary or by dividend, and it can be a very complex equation, but there will be additional costs in extracting the money from the limited company. With the recent changes so that dividends are taxed at higher rates than they used to be, albeit you get a £5,000 dividend tax allowance, there could be quite a significant cost to a high rate taxpayer in extracting the money from a limited company. Having said that, no matter how bad it is, at least you're not in the position of paying more tax than you are earning in net rental income after finance costs, which you could be in that position as a private individual.
So yet again, go and take some professional advice, sit down with your accountant and work out the best position.
Definitely.
Are more landlords using limited companies to purchase buy-to-let property?
Yeah, increasingly we're seeing nearly all of our customers, probably around 60-65% of ours, making new purchases into limited companies, and probably the similar number of people actually purchasing into their limited companies on properties that they own in their personal names at the moment.
You mean transferring them over, even though it's a sale?
Technically a transfer from their personal name to a limited company, but it's deemed as a sell and buy transaction.
For more information on buy-to-let mortgages for limited companies, visit the website or call us today on 0345 345 6788.